Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. It is actually Friday, May 31st, about 2:30 p.m. here in the East Coast, but we're keeping our date convention that we normally work with. If I keep finding a way to get these completed on Friday, we may have to switch that. But for now, we're keeping it. And welcome to this week's macro measure. Here is our trusty disclaimer from Market Rebellion. And here is our trusty intellectual property rights notice. And then here is our single slide for the week. I'll leave that up there for a little bit, and we'll talk about it. Last week, just a flash to it really quickly, we talked about the NVIDIA saving the world, or NVIDIA saving the world, however you say it. But we noted we had issues and talked about in our write-up on one of the newsletters about a rug pull possibility. So that's really what this is all about here, that we had those issues that developed further this week. And now I'm looking at it saying we're waiting on the almost reflexive, reactive, short-term bounce potential is what I'm thinking after kind of the drubbing they've had this week. They'll be starting a new month, and they'll be hopefully trying to put a bounce together. So I'm assuming if we're kind of news neutral over the weekend, that there's probably a greater likelihood, I would say, that they try to put a bounce of some degree together. Will it be that short-lived bounce or something more will be carried further, right? Or it will be something else entirely. So who knows, right? That could obviously be that we do see just more immediate downside. But I'm just getting the sense with the way they're holding things up here, and I don't have the benefit of seeing the closing action, which I think can be important. But many times we've seen them discard Friday and sort of start as if all over again, as if Friday's close didn't matter. So don't want to extrapolate too much into any one thing or from any one thing. But the highlights, I guess, that we could talk about is that we did really get the rug pull. I think that's pretty clear now in retrospect. I think that we are set up for a good summer according to the presidential election cycle. This being the fourth year, June, July, August typically being good. And the buybacks are set to dry up, though, by mid-June. So you have a new month. You've got buybacks still in place. You've got a market that sold off pretty strongly for on a relative way in recent times. We haven't seen this in a while. It was certainly due. I'm thinking that starting the new month and still having the buybacks in place without news, the gang probably tries to put a little something together. And that's what we'll cover on the charts. But that might be it, right? If they do put something together, we roll over again with buybacks going by the wayside by mid-June because they'll be getting too close to their earnings releases in July. A lot of companies will anyway. That could really become an issue. I do think that the wheels have come off further with respect to the consumer data. There's been a lot of bogus stuff that's been pulled by every Dick, Tom, and Harry, probably working in different government areas and whatnot. It's starting to, more and more people, I think, are questioning it and knowing that we live in this fantasy world that only statisticians and economists can really buy into, and Wall Street themselves really probably doesn't buy into it, but is still willing to sell it as such. But I see more and more people online and just in the real world saying this is not adding up. You know, all this stuff's not adding up. And obviously, it was a rough week for geopolitical. There's certainly more ratcheting up. It seems like we have some folks that are just hell bent on trying to start a large conflict. An even larger conflict that would spring up here or there. Maybe if they're happy everywhere, but hopefully that will not happen. Hopefully sanity will prevail, and maybe with God's hand being added to the mix. Unfortunately, most sectors rolled over more this week. We have seen a little bit of a late week bounce in a few, so all is not lost, but right, it's just a little bit of a bounce starting. I still think things look concerning. I think we'll cover this, but SMH, XLK, XLC, like there's just issues there with everything that's transpired. We did see quite a bit of sector ETF put buying, and we also saw some key areas like the SOX and SMH, and well, NVDA also had a lot of call buying near the top. So I'm pretty convinced that at the time I noted it too, that there was a good chance that was hedging for shorts because it just had gotten so uh, absurd to the upside. Anyway, we did have the diamonds double top a while back. They've struggled. IWM put in a lower high for now. I think really we started noticing the leadership narrowing, and the spies and Qs were kind of doing it on their own, mainly with the help of the semis, more so than anything in the week or so, 2 weeks prior to the top. But so those did power, but they also have backed off at this point. So they've corrected. I do think there's been enough damage, as I've noted, in the short term with what we've seen since late last week, since that sort of reversal day on the NVIDIA rug pull, that we've got enough short-term oversold this that they can do something, as I noted earlier about the news neutral situation. I would assume they try to put a bounce together, news neutral weekend. That's the big question for me this week is, if they do put one together, where does it carry to? How healthy is it, right? And if they don't start buying more sectors, and most of these sectors stay in the current predicament they're in, which is that they look a little concerning because some have what I would call double tops, some have had lower highs, some have had false breakouts, not really that great, right? So SMH, XLK with false breakouts, XLC with a double top, that's all starting to become a little more concerning. And so we'll leave a lot off the table, but the DXY, the TNX, they are both fading as the week ends after sort of spiking. So very interesting there as well, because there could be a lot of crosswinds that are accounting for that, and different types of other types of market activity and demand and supply here or there and everywhere that's causing some of that. But bond yields backing off in the form of the TNX, theoretically a good thing, but it could be a little bit of a flight to safety. And the VIX, as usual, kind of having a rough Friday, but did put a little pop together from that multi-year low. So on that note, let's start switching over to the chart views. I'll try to work all this down and away so it doesn't affect us, and then get on with the chart views. So trying to keep everything short for everybody, since that's the apparently that's the real shorter, I should say, but that's the real, I guess, demand, top demand out there, which again, as many of you know, I find it very difficult. But this is what we're talking about, right? You get this breakout above the highs and the Qs, and then you kind of pull back to it. And this is what we talked about the last few weeks, that if it did come, what would happen? We've reached that point, right? We did get the breakout, and now we've got the pullback towards the former highs. I've had a line here based off of a few, I guess you could call this bigger white line, the flat line. I'll switch over to a pointer. But that flat line to me, that's mattering, right? I leave these on there, and then I'm trying to make it blue for everybody, but I'm getting like a double click on everything I do right now, and I don't know why. But I get I leave that there. If they tend to matter later, then I consider it even more relevant. And so that's where we've come to, and that's where they're trying to keep the close. So that's not something I just added, just something that's been there, and it looks like they're respecting it to some extent. Again, they plunged below there. Now they're trying to close it above there. You can see that on the Qs, right? The short-term SMAs in the form of the 10 there, really in white, the 10-day, that is struggling and it's rolling over. Not the end of the world, of course, but that's how things start, right? That's how bigger corrective phases start. And as of right now, this one's been just a mild one, right? Where you've pulled off in terms of high to low, you've probably dropped about 3%, a little bit more than 3%. So it's not the end of the world. Some things, of course, have really gotten hit hard, and some earnings releases caused some real trouble for companies too. I think people are starting to acknowledge that it's just not that rosy out there, and that the Atlanta Fed GDP and all that stuff is, just completely concocted. The fact that it's been double the Wall Street consensus for so long, but we haven't touched on things like that in a while, just in an effort to keep things a little bit shorter. But I don't think it's the end of this market yet. I mean, I think I don't want to overdo it to the downside. I think the 50-day there in gold is sort of waiting for this on the next level lower, next big level lower. So I think you could look to the 50-day. If we break today's low, clearly the rising 100 there in dashed white or light gray, that's also got another sort of flat line that I've had there. So when you start to see things sort of dovetail together nicely, like that's just that confluence factor, and you end up with a few forms of support. Usually it adds to the support cause, that you normally, right, they have even more reason to support where they do. But should that not hold, I think you have to look to this this high here in that vicinity of 427, 428 as a possible gap closure. If they do an overshoot, should we correct more than we have at this point. But as of right now, they're holding things up. We have to see what next week brings, right, to see if we're going to just get that bounce. And then where does that carry us to? Should there be one? Lower high would be something like where I'm at now. Okay, about 457. Just ballparking, of course. Double top would be about 460, 461. False breakout, anything above there, there'd be another false breakout. So I think the problem is, right, that we've been highlighting now for really a few weeks, has been that the breadth issue just keeps coming to the forefront. And it's not like this is always immediate where you see some breadth issues and then that immediately translates into this 4-day sell-off, right? We're really only 6 sessions removed from the all-time high, and with the shenanigans they pulled on Tuesday, right, to open and move it up and kind of close near the highs, they were only about 80 or 90 cents away on the Qs. So we can't act as though we've really been crushed, but there has still been this deterioration overall. So it's not as if stick a fork in it, I think, at this point. It's just that, look, it was due. You got a little bit of a tip off, I think, to it. I don't know why it does that. You got a little bit of a tip off to it, in the form of the sectors that were really stopping to participate or halting their participation in the rally, the narrowness of the rally. We were ready for it. We had the calendar as well in the form of a rug pull potentially on NVIDIA. So I think a lot of it was there. You'd never know what's going to happen, but at least we had a shot to be prepared for it. And hopefully some folks were able to capitalize on this week's weakness. We did have a lot of bearish ideas. Fortunately, our guys found a lot of bearish ideas that I was able to push through into the UOA Pro log. And I don't know how they've all done, but at least we had them ready, right? And that's really all you can do is, if you see some opportunities on the bear side, is prepare, and hopefully your instruments that you've got things set up for are part, they join in or are part of the sell-off. But look, so we can't really overdo this. They are holding this above a key support as we close the week. So I'm always of mind that when in doubt, give the benefit of the doubt to the trend, and the trend is still up. So I'm not a bull. It doesn't make me a bull. I'm just saying that if you're trying to make a tough call right now, right, I would expect that these guys just don't roll over unless there's more new and just go straight down and plunge, unless there's more news that would drive that. And that would obviously blow up our news neutral assumption for the weekend, but or maybe even early next week. But otherwise, right, I'm thinking we've got to watch the bounce. If the bounce comes and we see this really sort of poor bounce, and then you're back under pressure quickly, that's not normally a good sign. Then you may start thinking about a whole nother leg lower. Then you might start thinking about this gap closure. Ryan and I earlier this week, when we started to see the action, knowing all about all the things I've described in the videos, we don't have a lot of time to trade, but we did initiate some put butterflies to the downside in the Qs. And so we had a good little percentage return on those without really having the time to watch them. And so what we did was we captured that, and now we're positioned with another put butterfly. And what I'd like to do with those is get aggressive about my short strike if they move the ETF against me. I usually wait for a vulnerable time, and then after they've moved it up, and if I think it's going to roll over, I'll just buy back my shorts and then leave the two long wings on together and then see what happens. It's kind of a lot like what Ryan discusses and covers and teaches in the Time Bandit services along with the smart spreads. But anyway, that's really what I'm looking forward to. I think we're always looking forward, where the normal place to have this thing sort of end and bounce, again, without very strong news, is got to be near that 440 level. I'd say another full percent down from here, a little bit more, where the 50 is, where this level is, so that you've got your level there. Breaking through here would be the start of something more hopeful. If you don't break through here, this resistance line that I'm highlighting now, or I thought I was highlighting in blue by clicking on it once, it's for some reason, everything I do is being taken as a double click. I'm not sure exactly why suddenly that's happening, but it is. But you get the idea. So let's give them the benefit of the doubt for now. Let's see what they can do if they are able to put a news neutral bounce together. And then we have to be on the lookout for lower high, double top, again, false breakout. But I think there's enough selling that's transpired for us to say that's reasonable, right? It's reasonable due to the short-term oversoldness that they would try to put something together, should be able to put something together, could put something together, however you want to phrase it, but it's there. And it's a very similar situation because they traded so similarly, right? And the SPYs and the Qs, there's your 10 that just sticks out as starting to roll over. You would expect that, right? It's the most sensitive. It's the shortest time frame. It's going to react to the new price data the most quickly, and that's what it's there to do. And so now you come to another confluence zone. And like I always try to remind folks when given the opportunity, and this is why I would tell you, if you think there's support at 517.49, because that's where the flat line is, don't bid 517.49. Right, you've got to be, if you're not watching it, you've got to try to bid in front of that. But if you are watching it, you start to see things shift on the intradays, then you've got to make a decision. Like, kind of got to where I was thinking it would, didn't quite make it there. But look, if you've been short this, that, or the other thing for several sessions, it's not a bad place at the end of the week to capture profits, right, on a swing trade. But I would say very similar things about the SPY. I think it's had enough damage happen to it. You can see they're already, the more I talk, the more they rally. So I guess that diagnosis at this snapshot in time was, I guess, when I first wrote it up a while ago. At this point, it was probably I started writing about, I think about 50 minutes ago, but they've been taking things up ever since. So I guess there was enough in the short run of damage for them to consider stepping in, and that's what they're doing. Let me try to get this line working. I apologize, because Thinkorswim it's a combination of the computer and Thinkorswim that they just are making everything I try to do so much more of a battle. And I'm not even running the normal stuff that I do to the extent that I normally do, but just catching a bad day with the computer. But there's your line, right? That could very easily be broken. Wouldn't take much, clearly, on the SPY on the current resistance line. And I think you have to just look at the 10-day, right? So at this point, if you want to feel better about it getting on better footing, you've got to look at about 527.62. So it's got some good work to do. I mean, that's only really, right, just a little bit more than 1%. But that it's got work to do. But otherwise, if it can't get its act together, can't hold the 50 there in gold, right? It's a similar gap, right? It's that similar gap that we saw at the start of the month. So that's what I would look at in terms of your upside and downside. You want to trade the long side, like they're going to go to put another assault on the all-time high together, then wait for the 10-day to start feeling better about that. And if they crack this 50, remember, it's a very obvious thing that's very widely followed. So you always got to be on guard against false breakdowns. But if they do break it down, if it does intensify, if it starts dropping, obviously the 100s there, and then this gap level really become. And remember, I wouldn't bid that high that day of 505.89, right? I'm probably going to be bidding 506.50 or wherever this 100 comes in. that will be 507.16. I'm going to be somewhere near there as my real target, because waiting around for everybody else that wants this gap filled, it might still happen, but they could, right? It's better to get most of your money made and then let them play their games. And then you're not really worried about it. You're not on it with the white knuckle death grip on the steering wheel of the bear trades you're riding at that point, because you've taken a good chunk in. Or, right, you decided you'd rather initiate another trade and you just close the whole thing. Just freeing really to get close enough and take the money. That's what I learned anyway, for this, what helped me way back when. Let's see. So that's pretty good coverage there. Yeah, I just think, unfortunately, it's kind of happening. Like, I don't know how much this video is really going to help people, because I'm talking about a bounce and they're already starting to put it together. Unfortunately, it just continued to really, the last hour seems like they really have worked it against me strong in terms of telling everyone to look for a bounce. But that's just coincidence. Anyway, IWM, right? It's been a great vehicle at times. Ever since really I kept talking it up for being a great trading vehicle, it really got tough, right? In terms of back and forth. I've been talking about how this can really be dirt cheap in terms of the volatility, and you can play it on the cheap. And there's all kinds of options, of course, due to the liquidity, all the strikes they've got. You can play this and really fine tune everything you're doing very nicely with options without a lot of slippage or worrisome executions and things like that. But it's really been kind of a staccato thing a little bit here, with big move down, gap up, sell off, gap down from there, look pretty poor, like you're breaking down, right? Then gap back up again above the 50 and then move it back up. So there's a great example of the false breakdown we were just talking about. But, right, it's now running into the 10, the 15, the 20 there in light blue. And it's got stopped in its tracks trying to rally as a result. And it's now below the open. So we have a pretty weak looking candle. So really that downtrend is still intact. It's kind of wearing on. They really did throw a lot of knuckle curveballs at IWM traders this week. If you held on overnight, you had to deal with this, that, or the other thing. Then they move things pretty sharply against you. But I kind of find it difficult to believe that with what I've uncovered, that we're going to see, from a fundamental perspective, which I would not trade on, and I do not trade on, that things are going to get wonderful for the IWM. I just don't have that sense right now. I kind of feel like things are really not improving. I would say, to put it kindly, I think things are a little bit more in the concerning camp. There has been a little bit of an uptick globally that sort of seems a little strange to some observers, but that's not really that's obviously better for commerce overall. Some people are a little perplexed by it, saying like, will it amount to much, or is it just kind of like a little bit of an upsurge blip? Upsurge blip, excuse me. That doesn't apply to IWM in most cases, right? You're talking about a lot of smaller companies. I think that's a pretty decent resistance line that we've got in place there. So pretty much, right, taking out today's high and closing above it makes you start feeling better. And like I said, I wouldn't take the fundamentals. I don't think things are wonderful for the smaller companies in the US right now. If you look at some of the things, it looked like what I think Ryan said, Dell, Kohl's, some of the reports that are coming out are just not that great with respect to the consumer. Others might counterbalance that, though, so I don't want to make that as if it's a blanket statement, but it just seems like there's certain rough patches for sure, and the consumer's under pressure, and this consumer is being a little more cost conscious and debt conscious and things like that. So really not a robust consumer environment, and that's likely due to the American indebtedness across the board. And maybe that has run its course to a certain degree. But look, they've held on to the 50. They did fail here. So you're trapped between the two SMA levels, basically the 20 or the 50, and waiting for a break above or below and looking at the rest of the market and seeing how things are behaving. That's probably going to be part of your tip off. So this thing's now been struggling for a few weeks. They've got the new money coming into the market at the start of the month. Like I said, the buybacks are still in place. This doesn't really affect IWM, obviously, as much as those mega caps that are buying things back that have the bigger weights, blah, 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 blah. But this could start to become an interesting trade, or you could look back on this and say, well, that was a double top sort of there, right, with what we just saw. You might end up saying this was the sign where it was finally able to hold the 50 when the market was not acting very well overall, and then it broke out from there and put another strong upside leg together to finally start to price in inflation, that the way that it seems as though the other index ETFs have. Some would say, well, I see something different than that. I see an inverted head and shoulders starting to form. And that could also be the case if it starts working its way up. But I think at this point, because I think there's room for a potential bounce in a news neutral environment, a little bit more than what we've seen here in the last 50 minutes since I started looking at it that way, unfortunately. I would not, you just can't rule things out, and breaking out above 212 could really start this thing on its way, right? If the market is still going to deliver more bullishness this year or maybe in the near future. So don't rule that out. I think work with your 20 there in light blue, 205.50. That's your early aggressive, and then work with your low today, 204.15. That's another good spot. Now, why am I getting? I'm sorry, the low is 203.08. I guess I was on the wrong thing, but yeah. So I'm not sure why they've got this, but this the 50 is 50 is 202.85. So just a little bit above. 50 is just a little bit above today's low. I'm sorry, a little bit below. Wait, yeah, a little bit below today's low. So I would just wait on that. And again, I would look to see what the rest of the market's doing after the smoking that's happened in SMH, and we'll come back to it. I'll cover the diamonds, then we'll come back to this. But after the smoking this has had the last couple of sessions, right? You got to think that, not that it will, but there's probably some rabid buyers that might think that they're getting the deal of a lifetime. I mean, they were certainly thought the same. It looked like right late last week when we were making new all-time highs there. But this diamonds looks like this diamonds here. It looks like well, let me switch over to it. It's not there. It goes. The diamonds to me, they look like they found a level, and I would again say that news neutral. Look at some of these readings. I think the gang tries to put a little something together early in the week, would be my news neutral take on it. And again, I think there was enough selling damage that happened that got things kind of wrecked. And I wouldn't be surprised if they do a little bit. Now, that's what you've got to look out for, in my opinion, if you chart with these tools. Not that these are the only ones you can use, but you got to look out for what this is able to do once it gets back up to the 100, once it gets back up to the 50, once it gets back up to this ganglion of the lesser 3 or lower 3, if you will, right? So if it does make its way back up there, let's see how it acts. I think it's possible for it to bounce a few percent. I don't see why you would rule that out, right? But this is really the buzzsaw that it's going to run into, which could be lethal, because we have that right there. Now, I don't know why this thing is resizing so strangely and all that stuff, but it is. I might have to switch to 9-month or something. Thinkorswim really struggling here. I'm just keep slowly but surely working my way over to TradingView, and I'm getting tired of using this thing because it just fights with me so much. There's something about it right now that's just not acting well. It's probably the Schwab touch. But look, that just looks like to me like they're going to, all things being equal, they're going to try to work this back up. And they got a lot. geez, they got a lot of people drawn in on, man, it's really something right now. I apologize. There's nothing I can do about this. We're in the middle of the video. But to me, this, you could see where the resistance is going to come in. If I could just tweak that line a little bit, it's all going to be right between the 50, really, and the 20 all over again. So I would think they try to rally. And if it's the weaker the rally effect, the more confidence I'd have that there's going to be another rollover attempt, clearly. But they just can't lift this off. And you start to see things, maybe even by late Monday or Tuesday, roll right back over, and you're attacking lows. That means they're really having a tough time trying to find a bid. I think like long term, right, there's still a lot of potential here. But I think this juncture is a little more dangerous than it first appears, right? Just because they ought to be able to do some good stuff coming up next week, if I think overall, and if they can't, that to me means like it's a little bit worse than we think, right? Things are maybe a little bit worse than we think out there, and stocks are starting to possibly reflect that more. Here's the SMH though, and remember, this has been the leader. This has been the area, and everything's sort of fine here. It did have the breakout. You'd have to call it a false breakout. They did the old rug pull with it, NVIDIA. Now you're back down here on the 15 is where you're stopping there in red, rising 15. Everything looks great, stacked and sloped in terms of your SMAs for people that like that stuff. But we know, right, that this is highly concentrated. A lot of people are along these things. A lot of people have bought into a lot of hype about this stuff, and that all may be true. And there could even be much, much more upside. We can't ever rule things out, but right, you can't really like the behavior if you're someone who thought this was really up and away, and a whole nother leg was unfolding here. We might have to deal with a more of a corrective leg that continues to develop before this thing really is able to go up and away, if it is to do that. And that's a whole different question. But I think this is not a great look for your leader, that you broke out and looked like such a world beater. You got really stretched. All those call buyers came in to buy long calls near the highs and started, I think, selling the dickens out of shares. Or had already sold the dickens out of shares and decided to hedge themselves. And their timing was excellent, by the way, which it often is. So, like I said, I put those in the write-up, some of the write-ups to try to incorporate that, but there was too much other UOA I was busy with and just couldn't get back to adding a bear side idea in them. So that's why the pro service people in there that know what they're doing, they probably didn't hesitate to decide to take the short side, at least some folks. Let's see. Oh yeah, I wanted to cover XLK and XLC, even though they're part of sector situation, just because remember, these are probably your big leader areas. They aren't all the time, but they often are. And excuse me, boy, it's really rough. There's another one, right, where you break out above the new high. It looks fine for a little bit and then just deteriorates quickly, and you come basically right back into the 50 nearly, right, in gold. Or maybe you did get to it. There's a gap here. So, right, this is just not good behavior. So I think, again, it's enough in terms of short-term oversoldness. What I mean by that is, if you look at some of your intraday intervals that you can check out, look at maybe like, I don't know, a 1 hour chart or a 2 hour chart, something like that. And those things have really gotten smoked. So that's where I come up with the short-term oversoldness, especially, right, if it's on support on a daily. So then you have daily support, which is 50 and 100 are pretty nearby, and you've had a pretty rough drop, and it shows up here too, right? And kind of like maybe not your worst sell-off. Could there be more? Sure. But it's getting down there towards some of your lower low areas on some of your oscillator readings. And as just a picture overall, finding support, holding, getting short-term oversold probably means they, again, news neutral, they try to put a bounce together, but you can't be happy with that, just overall, right? You can't be happy with a false breakout. Now, remember, the market's incredibly dynamic, so we have to shift our thinking from, okay, false breakout to higher low, right? If they start bouncing from here and start taking it through the highs, we have to look at that and say, quickly, and say, okay, now they have a higher low established, they might be ready to jam this thing through. I don't think that's going to happen, but I won't. Just refuse to rule it out because these guys have surprised me a gazillion times, right? More than I ever expected them to, with what they're able to do, what they're able to get away with. So you just got to respect the price action. But XLC, right? You've got to call this potential double top. It's not over yet. You don't want to panic too much, right? It's still holding above the 20 day, for goodness sake. It's the 20 SMA there in light blue. So it's literally just a little ways away from taking out the 10, which means all SMAs would be below it. So it's hung in there quite well. But you can see, right, visually how this thing's sort of topped in just about the same area, and it could invite more trouble with just one more bad session. You drop below that rising 50 there in gold. I think that opens the door to more downside that's more significant. So again, things can change very quickly. So you could have something that's holding on and now suddenly it's whooshing lower. And this thing's been rock solid, right? They've really have kept this thing rock solid to this point. But it is flashing at this snapshot in time, that rollover potential. So I think that's what you've got to be on guard for. Just you're really in that mode where you're willing to, take whatever comes your way and trade both sides and get ready to react quickly. You're not just in that kind of really strong bull mode we have been in for some time, that not that we got lackadaisical about risk, but that we were able to really kind of kept teeing up more and more bullish ideas for the longest time, and most of them had at least a chance to work, as opposed to now where you are playing a little bit more of a guessing game, I think. I don't know why this is really fighting this bad with me. Here is the dollar. And interestingly, right, the dollar is, we've had a couple of rough sessions in the market here, and the dollar has too. So that's very interesting. Normally, right, it's been fairly inversely correlated. And you can see the dollar is at a juncture that either it finds support or it's at risk of making new lows. Normally, that would be good for the market. Normally. So we'll see what's going on there. I'm going to have to look into what's happening there a little bit more. It could have to do with, the foreign currency trades, the carry trade. I really don't know at this point. I don't have time to follow everything, unfortunately. TNX, similar, right? As we've said, inversely correlated to the market, basically in recent times overall. And it's a very similar profile to the dollar. So this was looking like it was going to go, and they brought it right back in towards support. And it would be theoretically right, unless it's sort of, which I talked about actually recently, it could be that safety trade, right, where they sort of head into here and they really start buying bonds, and because they're concerned about the market. And that would be sort of like giving the market what it wants in the form of lower rates, but really it would be a defensive positioning type of development, and that's probably really not good, right? Which is probably to some degree what's happening. I don't know to what degree, but I think to some degree that's already been happening. I mentioned that, I think, last week or this week or both weeks. But VIX, right, we talked about it. We said, I hope someone listened. I didn't even have time to listen to Greg and Ryan all week. I do tune in. I'm there listening most of the time, but sometimes it gets busy and I can't really focus on the discussion as much as I'd like to. And because I'm too busy trying to get ideas in or updates in or something like that in some of the other services. But as far as VIX goes, that was a great opportunity in retrospect to get your hands on some cheap IV. And that might still be the case, right? That might still be the case. We'll have to see. The more that these guys start to really drum up instability around the world and even domestically, this is probably not good and probably does lead to more volatility. And I think even at this level, which is a couple of points higher, 2.5 points higher than where we were at the low of last week, I still think it's worth having some outer month volatility. As I said before, Oct, Nov, Feb, those are my favorite months. If I'm at this point in the calendar, right, late May, those are my favorite months to own at this point. I would also, it depends on where you are, right? If I'm in December, I'm really looking to own May. It's been that's one of my months I like to own. I feel like it's always been a pretty good trader, and it lets me sell things in front of it and avoid summer vol. I would also, at this, if I were earlier this year or something like that, I'd be looking towards July or early August, only because that's going to get the earnings pop for the second quarter that you'll be able to be long for that. But I like being positioned in May, but it's almost moot now compared. It's not, but it's just so much easier to get your hands on whatever options you want now because you've got so many more expiries that are out there from time to time than there used to be with due to all the weeklies and so forth and so on. But still, probably not a bad buy. I'm trying to think if there's anything else. There really isn't like the typical, big oil development, this, that, or the other thing, the copper that we typically talk about. That, we could talk about them a little bit, but I'm going to stay away from lumber. I'll go to, you could see that was sort of that we talked about. There was a squeeze going on in there. That's sort of ran its course, and now that's sort of coming back towards the trend. It got accelerated for a while. Cotton wood, right? They've backed off a little bit in the last week and a half as well. Come on, guys. Yeah. So again, to a degree, we can't really get the lumber the way we used to. There has been some IYR type put buying, ITB put buying, maybe even XHB put buying. But these are, I can understand why people are doing that in terms of the fundamentals on certain things and all, but they've been pretty resilient, right? I've noted it many times where it's at odds with my take on things, which is why I don't trade on based on my take on things. But these have been really resistant to going down, right? They've done a really good job of hanging in there to this point. I still think they're in trouble, unfortunately, but just because I've been through so many cycles, and I hope to be dead wrong about that. I just hope to be dead wrong. But what else can I cover? Yeah, I think that's really it. I mean, we just don't have a lot. I could probably bring up oil, but there's really not a lot to say about things at the moment. With this is kind of all what, in other words, I think this is all confirming all the things we've seen between copper, oil, wood cut. These are all confirming that we're sort of slowing down. I think there's continuing slowdown out there. And so, yeah, I think you've just got to acknowledge that maybe that's what's partially happening here with the market is there's a little bit of an acknowledgement that things are slowing and that these prices, these very high inflation driven prices, combined with the other stagnation and stuff like that is not a good mix. And markets have certainly priced things in, I think, a lot more optimistically now. Again, they may be looking forward beyond this calendar year. That's the claim that so many make. But it also wouldn't surprise me if things get a lot tougher, for longer in the economy than they're maybe looking past. I think you could still see some rough stuff that worsens. I hope that does not happen, but I'm just saying I think that could happen, and the market would, again, like, positioning yourself early is great as long as it keeps working. But if there's a major correction between now and when things really start to ignite the way you thought they would, you could be real early and really in trouble. And that's usually what happens is people find themselves having been too optimistic too soon. And then we do get corrections from there. So I'm going to end on that note. I do hope that something I shared with you helps you out this upcoming week, helps you out maybe some week in the future. Again, I think you're looking at news neutral, a good little rally attempt, at least I would think reflexive type bounce. And then we'll watch and see what happens from there should that develop. If it's something else, I'll just use the levels we discussed, but nothing horrible's happened yet. I do think the recipe's there for more, but I think the likelihood is that you do get that bounce and then we see what happens from there. I'd rather do that, go in with those expectations, and then adjust from there just because I think there's been enough short-term selling as of right now. So we'll see. I think you've got the new month, as I mentioned, coming up. You've got the buybacks in place, and you've got the presidential election cycle. That should all help bulls, in theory, starting when we come back after the weekend. And on that note, have a great and safe weekend as always. Thanks again for tuning in, and I want to wish everyone the best. And I'll be in touch with the sector situation video shortly. Thank you.